I want to talk about gold. I know that a lot of people who have been attending the mining conferences over the past decade or so are probably pretty frustrated given that gold hasn't made any real headway since 2011. Back then, I think gold topped out at around 1900, and we did manage to make a new high over the last couple of years. Right now, gold is just under 1800, so it's lower than it was back in 2011. And a couple of things have also happened during that decade that has added to the frustration of people who have been holding gold. One is the long overdue emergence of inflation. Now, of course, inflation's been there all the time, hiding in plain sight. They didn't call it inflation, they called it quantitative easing, but that's inflation. It's just a euphemism for inflation. It's a way to explain inflation without getting people upset. Because if the Federal Reserve leveled with the American public and said our policy is creating inflation, the public would respond, whoa, I don't like inflation. I don't want the cost of living to go up. Can't you come up with a better idea than inflation? Well, they couldn't. That's all they had. They just came up with a better name, quantitative easing. And they liked it so much, they really did it 4 times, the last one following COVID. So we had a massive inflation of the money supply, yet the price of gold hasn't reacted the way a lot of people thought it might have. And of course, even during the years where everybody pretended we didn't have inflation because they pointed to the CPI, and that showed that inflation was around 2% or less, the CPI has been rigged. It's been designed to understate the true effect inflation is having on consumer prices. And so all along, prices were moving up a lot more than 2%. It's just that nobody admitted that, although I think the public had an idea that this was taking place. But now prices are rising so much faster than 2% that it's really impossible for the government statistics to hide it. Sure, if the government statistics are showing 8% inflation, it's more likely 16%, but 8% is bad. I mean, 16%, of course, is far worse, but even 8%, if inflation was that low, is still very bad. And of course, most people who own gold own it because of inflation. They're worried about the erosion of purchasing power of fiat currencies, particularly the US dollar, but other currencies, the euro, the yen. Central banks are printing a lot of money, they're running these deficits. And so people who understand this want to own gold to protect against inflation, yet the price of gold has gone sideways again for the last decade. And then the other thing that happened that probably frustrated a lot of people holding gold was the rise of Bitcoin, because Bitcoin rose from relative obscurity in 2011. Nobody really heard of it other than a few libertarian computer geeks who were buying it below $10 a Bitcoin. I mean, at one point they were pennies of Bitcoin, but for a while they were under 10 bucks. And it kind of really rose on the scene in 2017 when it went from 1,000 to 20,000, and that's when it got on everybody's radar. And Bitcoin was marketed by its proponents as a newer version of gold. It is gold 2.0. It's digital gold. It does everything gold does, only better, faster, cheaper. So this is the new version of gold. Gold is analog. Gold is a horse and buggy. Bitcoin is digital. Bitcoin is an automobile, and all forward-thinking people are buying Bitcoin. And, you know, if you're a dinosaur, if you're buying gold. And for a while, Bitcoin prices just kept on going up. And they got as high earlier this year of just under $70,000 for a string of virtual numbers. But all the while, people that were holding gold were made fun of because gold wasn't going anywhere and Bitcoin was going to the moon. At least that's what everybody thought. And it certainly was on its way to the moon when it got up to 70,000. A lot of people put laser beams on their eyes in social media to signify that they were going to keep those lasers on until Bitcoin hit 100,000. Well, they're probably going to die with those laser beams on their eyes because Bitcoin's never going to hit 100,000 because the Bitcoin bubble has popped. But I think the deflation of the Bitcoin bubble is going to coincide with the next big move up in the price of gold. Because when people look at the last 10, 11 years in gold and they see sideways action, and then they conclude that, well, gold is no longer an inflation hedge, it's no longer relevant because it's not going anywhere, you have to look at the last 20 years. You can't just look at the last 10. You got to go back 2001 and see that gold was under $300 an ounce in 2001. And it went from under 300 to almost 2,000 in 10 years. That is a big move for the price of gold. Now, following that move, gold did have a significant correction. Between 2011 and 2015, it corrected down to 1,050, but it never got back below 1,000. And of course, it never went anywhere near the level below 300 where it began the bull market. So gold had a correction, and then it rallied up and made a new high by 2020 after COVID. And it's pulled back a little bit from that high, but it is really consolidating the big move up from 300 to 1900, been trading sideways. It is building a new base from which the next bull market is going to be launched. And what is delaying liftoff of this gold rocket ship is a misconception on the part of investors around the world as to the real situation with inflation in the United States and the Fed's ability to put the genie back in the bottle. Because for years, the officials at the Federal Reserve were telling us that the problem was we didn't have enough inflation. And they were going to solve that problem by creating more inflation. Well, they created a lot more than anybody bargained for, because now the problem is obviously much too much inflation. But when inflation first got to their 2% target, which used to be a ceiling, it was never created as a target, but it was reinvented as a target because the central banks wanted inflation, not because inflation is good, but because that was better than the alternative, which they were afraid of, which was deflation, which would have actually been better. But they needed inflation to keep the stock market bubble going, to keep financing government spending, to keep kicking the can down the road, which they really started to do in earnest after the 2008 financial crisis. But when inflation first got above 2%, instead of stepping on the brakes, the Fed said, we want inflation to be a little bit higher than 2% because we need average inflation to be 2%. We need to make up for all those years where inflation was a little less than 2%. We need to let it run a little hotter. We need 2.25% inflation. We got to average it out, as if somehow we have to be punished because prices didn't go up enough in the past. We have to make up for that by having bigger price increases in the future. None of it made sense economically, but the Fed had to come up with a justification for why it was continuing to print money and why it was keeping interest rates at zero, even though inflation was now north of its 2% target. Then when it got a lot above 2%, when you're looking at 4, 5%, 6% inflation, the next thing the Fed said was, well, this is all transitory. Don't worry about this. It's just related to the reopening of the economy. We were all locked down for COVID. And so this is just temporary. It's going to go away on its own. We can keep interest rates at zero. We can keep on printing money. We don't have to worry about this transitory inflation.